Greetings traders, this is Kenny Teachers, and today I'll be teaching you how to master liquidity. Liquidity is simple. Unlike how these forex traders and gurus try to make liquidity as if it's something that is hard to understand when they bring up new terminology, I always say in trading, terminology simply doesn't matter, because what are you doing when you are trading? All you are doing is you are buying and selling, and you make profit if you buy and it goes up, and you make a loss if it goes down. You don't even have to worry about a bullish or bearish market. Those are only things that you care about when you want to teach yourself, and those are terminologies that you want to understand when you are learning. But when you're actually trading, you can call it, for instead of a bearish market, you could call it a cowish market, because you understand it for yourself. So, guys, don't be fooled by terminology. Just focus on concepts, learn concepts, and execute them perfectly on the market. And today, I am going to be teaching you on how to master liquidity. So, liquidity is a concept that is divided into two. It is divided into liquidity zones and what is liquidity on a whole. Liquidity, what is that? Liquidity is when retail traders are stopped out by smart money traders. Okay, as I said, what is liquidity? This is another umbrella that breaks the section into two. So there are two types of traders that trade liquidity. These are retail traders and these are smart money traders. So smart money traders first, these are the most important players when it comes to liquidity. These are the big boys. These are the big financial movers. These are central banks. These are the Rothschilds family. These are Elon Musk. These are the most important people that make financial decisions. They have the ability to influence the market big time. So retail traders are what we are. We are retail traders. We just come into the market to make profit here and there. We take our losses. So how does smart money concepts work? So guys, here are liquidity zones. The three liquidity zones that we'll be focusing on are trend lines, order blocks, and we are going to be focused on support and resistance. So how are we going to use these three? We are going to make predictions to where the market is going to end up, and we are going to place our take profit and our stop loss at these liquidity zones. And we treat these liquidity zones as if they pull the market towards them. So let's say for support and resistance, let's say there was a support zone there, a resistance zone here above, and how would we then take a trade at this point? How would we then take a trade? We would see, okay, this is a bearish market because the last lower low was actually broken. So this is a bearish market. This is a bearish market. So this is a bearish market. We are going to place a sell, and we are going to place our TP at a very specific area. We are not going to gamble. We are going to place, enter right there as soon as the lower low is broken to make it a bearish market, and we are going to make sure that our take profit is at a support zone below. And then we predict that the market would actually go to that point. The market would actually behave in a way that it goes straight down and smashes our TP. So that is how we are going to use support and resistance as liquidity zones. We are going to place our take profit, our stop loss just above this lower high, because it is a bearish market. And that means that if it surpasses this, it means that it would be a bullish market, and probably aim for this resistance zone above. Now, how are we going to use order blocks? First thing with order blocks, we are going to mark the high of this candlestick and we are going to mark the low of these candlesticks. Took me time to create, so I would appreciate if you pay attention to this part. So we would mark the high and the low. We would take our triangle tool, we would mark the high, the low, and we would take that and we would spread it out. And our prediction is that the market would stabilize. Remember, smart money enters at these three candlesticks. We are going to look at these three big candlesticks, and this is where smart money wants to sell. But how are they going to sell? How are they going to take retailer traders out? They are going to take you out by, or try to take us out by buying. They are trying to take us out by buying. So they're going to buy, price is going to move up until it gets to this point. Price will not break this point. However, it might go up to a point like that and then it would shoot straight down, and this is the trade we would want to take as we utilize utility to make our trades. And let me show you guys with a measuring tool. We are going to take a sell trade in this particular example. As soon as we have bearish confirmation here, we are going to place a sell trade where our TP would be probably at the loss of the three candlesticks that show us that smart money is in the market, where there's a lot of volume, and we are going to place our stop loss just above. We are going to place our stop loss above the order block. Excuse me, we are going to place our stop loss above the order block. So if price actually breaks this order block, that means that it is not respected. And if it does, then it would retest the order block and use the order block as a support level. Okay, that is how we are going to trade using order blocks. That is how we're going to use liquidity. Guys, this is very simple, something you can learn in 2 minutes, and I will show you on the live chart. So let's go to trend lines. Trend lines are very simple as well. We are going to make predictions on where the market is going to go next, especially if the market is rallying. It's going in a place that it's never been before. So we would use trend lines to predict where it would touch next or where we would put our next take profit. Let's put a bullish market. Let's make a bullish market right here. Now we have a bullish market. We're going to make a bullish market, and if price is exactly stuck at that zone, we know that we have a bullish market, and just say we get bullish confirmation around there, so we would obviously go and place a buy. How are we going to place this buy? I will show you right now. We are going to place a buy, long position, take profit there, and then the market would actually go as predicted to our trend line. And actually smash our TP. So you guys know how order blocks are made, you know how trend lines are made, and you know how to identify support and resistance and how to use them to actually make profit. So now I am going to show you how to do this on the real market. So now I am going to show you how to use support and resistance as liquidity zones so we can make proper judgments on where the market is going to go. First, obviously, we want to mark our zones. Now, let's go and mark our zones. Let's mark our zones. As you can see, this is a very prominent zone where the market goes to and actually flips, and we will call this our a resistance zone because it's above where the price is. So let's go and put a support zone, and this looks like a very promising support zone. That looks like a very promising support zone where the market seems to go there and actually bounce back off from. As you can see, the market goes above this resistance zone, breaks it many times, but it always throws back to it, and that's what liquidity is. The market always goes back to these liquidity zones. So that's why we would place our take profits and our stop losses at these special zones. So let's zoom in on the market, and we as if we are about to take a trade. And as we can see, this is a bullish market. How we know that it's a bullish market? Because the last higher high is broken. The last higher high is broken. Here is the last higher high that is broken by this candlestick, as we can see it clearly. So this is a clearly bullish market. Now we are going to place a buy, and we are going to make our resistance level a take profit level. Let's do this by placing a long position. So now we are going to make this play out and see if this is actually a good position. Straight take profit smash, and this is how we are going to take positions. Liquidity, look at this, they are trying to swipe all smart money is trying to swipe all sellers out the market by hitting this liquidity zone and smashing through it. And now watch what smart money will do afterwards. Let's watch how this plays out. The market is actually going to another liquidity zone at the spot. So some traders would take the smaller position, but we would notice that and we would take this longer position, and we are going to take a risk to reward ratio as 3. This is the types of trades that we would take in the shark group, in my trading group on WhatsApp. Logs. So now I'm going to be teaching you guys how to use order blocks, my favorite, because we actually make profit twice from order blocks. How are we going to use order blocks to determine our take profits and our stop losses? And we need to capitalize off of this opportunity. So first, let the candlesticks form an order block. When we notice an order block is being formed, okay, now an order block is formed. What are we going to do in this time as traders? We are going to mark the highs and the lows of the candle that moved in before smart money, and this is the candlestick that is before the big candlesticks. So once these bigger candlesticks are in the market, we know smart money is in the market. And when smart money is in the market, what are we going to do? We are going to trade exactly like them. But before that, we are going to hit out the minor traders like smart money wants to. So how are we going to do this? As soon as we see the third candlestick form, no matter what it is, we are going to place a position in the direction of the marked higher low and lows of the candlestick that formed before smart money. If you get what I'm saying, this is what we are going to aim our position towards. Whether it's a buy or a sell, in this particular position, it is a buy because we are going to place a long trade right now. We are going to take a long position right here and enter this trade. Our risk to reward ratio would be 1:3, or it could be 1:2, however you feel safe. So let's make this trade play out. We are floating in profit. This is actually the riskier of the two trades, and we are going to take using this method. So I wouldn't advise this method, this first method, to anybody who doesn't have psychology. As you can see, we're floating a little in a loss. So as we see, the market went to this zone and it actually hits our TP. Now, what are we going to do when the market goes to the zone? We want to, let me drag the zone. We want to go to the zone, and when the market touches it and closes outside of the zone, like this, it went into the zone and it closed outside. Exactly at this point, we would have placed our sell and we would have been in full profit. As you can see, this is the more riskier trade to take, but this is full profit. So this is full on profit. So as soon as the market gets to this position and closes outside, we are going to place a sell order and we are going to make full profit, no loss. As soon as it closes, we are going to go straight into profit. And this is how we are going to trade order blocks. Let me not put our stop loss there. We will put our stop loss above the order block. Okay, So we know how to trade order blocks using liquidity. Now I'm going to be showing you guys probably the least profitable way of using liquidity. I know that I shouldn't be teaching this, but I'm going to teach you either ways because I also use it when it comes to trading. It's not something that you should avoid. It's something that more experienced traders should do when it comes to using liquidity. The other two methods, order blocks and support and resistance, would guide you to make a lot of profit. But if you want to also make profit off of trend lines, here is how you are going to do it. So you are going to obviously make your trend. You are going to make your trend. Remember that it needs to touch your trend line. The market needs to touch your trend line. Your trend line needs to touch the market 3 times. And the most important on a bullish trend is the higher lows, and the most important on a bearish trend is the lower highs. So here we are marking the lower highs. Once we mark the lower highs, I want you guys to do something that's almost unfamiliar, and we are going to clone. While we clone, we are going to clone and place here at the lower lows, and this is how we are going to use this clone as a liquidity. As we can see that the market always goes down, so this sort of pulls it. So let's see how this plays out. Let's make it play out. As soon as we have bearish confirmation, we are going to place a sell. Okay, this is a bearish market, so now we are going to place a sell trade. So when we place the sell trade, we expect the market to go to that spot. And now what are we going to do? We are going to see how long does the market take to go from a higher low or a lower high to a lower low. So we are going here. So we are going to use this as an example, and we are going to take our position like that exactly. So we are making a prediction that the market would probably hit our stop, our take profit at this point. So now let's make it play out. As you can see, we basically hit profit at that point. So with that, you know two most important things about liquidity, and you are able to master them on the charts, and you know what liquidity is if somebody wants you to explain it to them. Liquidity is simply smart money traders hitting out retail traders by making big movements in a market in a direction that is unexpected. You know what liquidity zones are. You know that smart money traders usually trade towards liquidity zones. That's why we can take liquidity zones as places that the market pulls towards to. Yeah, we can put our take profits, or we can put our stop losses just around those types of zones. So guys, now I need you, if you want to be able to scale your small account to a bigger account, you will be able to click this video at the end, and you will learn how to scale a small account to a bigger account.